Shares of IONQ are trading at $8.39, and they are down around 31% this year, mainly thanks to increased competition and missed revenue estimates. And with the AI hype kind of starting to fade off a little bit and hit a plateau, will quantum computing be the next big thing? Well, for my December 2026 price projection, their earnings are expected to actually decline around 50%, but their revenue is expected to increase 220% to 48 cents a share. And their current price of sales is sitting around 54, and it's so high. I'm going to use 20 for the 2026 projection, and if we multiply 20 by their 48 cents revenue per share projected, that gives us a share price of $9.61, which is a 15% upside. And it looks like other analysts are actually pretty bullish as well, with the average one-year price forecast being $10.63, which is 27% higher than where it trades right now, with a high estimate of $13 and a low of $6.90. And going into our triangle analysis, for growth expectations, it looks like IONQ has missed all 4 of their last earnings calls by massive margins. But in terms of revenue and net income, the revenue has been growing pretty steadily, which is nice to see. But their net income is negative and has been pretty stagnant over the past 4 or 5 quarters, but is starting to look like it's about to turn around, so we'll see about that. They have recently raised guidance for 2024, which is good. They've met a major milestone as part of their funding contracts, and it seems like their tech is actually starting to progress a little faster than their contracts anticipated, so that's a really good sign. And while their revenue and net income aren't anything to write home about, it's expected to be this way when you're dealing with a small company like this that's developing experimental technologies. So I'd put the growth expectations at a 3 to 5 because it seems to me like they're starting to turn the corner, but at present it's pretty neutral. And moving on to our valuation, a price of sales of 54, it's clear the company is majorly overvalued at their current revenue and earnings. And it's all because people are anticipating massive, massive growth out of this company, obviously. They're hoping that the tech is going to mature, it's going to be able to be commercialized and then sold. That said, though, the valuation is still on the decline, and it's so high that it just introduces way too much risk to current investors at these prices. And honestly, I wouldn't be surprised if we saw that halving by 2026. That's why I put around the 20 mark for 2026. And so for that reason, I'd have to rate the valuation at a 2 out of 5. It's not that attractive at the current earnings and revenue projections. For health metrics, though, they do not offer a dividend, obviously, and they actually have surprisingly done a stock buyback in the past, but they don't have any plan for the future. I'm not surprised about that. IONQ has a shareholder equity of $463 million and a total debt of $54 million, and that makes their debt to equity around 11%, which is actually really good. And their cash flow is in negative right now. They're doing a lot of heavy investment into their tech right now. That's to be expected. So their cash flow is not going to be good, but they do have $44 million in cash and cash equivalents, which is great given they've been spending about twice that recently. So per annum anyways. So for these reasons, though, I'm going to put their health metrics as a 4 because it's got good debt, good cash levels, and even though you'd expect this to be lower given it's a smaller company with experimental tech, they're kind of on the forefront of the technology, and it could easily fail as well as it could succeed. The reason why it's as high as it is because a lot of it's going to hinge on the growth expectations, which I put a little lower. It's really going to hinge on those future cash flows. But what they're doing with those cash flows is really nice. It's really good. It's just the cash flow in question, and that's more of the growth side. So overall, though, despite some poor earnings projections and really, really high valuation, I think this company does show a lot of great potential. And I'm really happy that the revenue is trending up and the estimates do look good. It's really difficult giving these smaller experimental tech companies like these ratings because, they typically go either way. They go really, really high or they go really, really low. And trying to predict where they're going to go, there's no in between. So in this case, I like the progress they're reporting, and I would like to put them as a buy, but just given the valuation, I'm going to have to put them as a neutral because the valuation just adds way too much risk. All of the good potential future revenue projections and earnings estimates have already been priced in. But here's the thing. If the price were to fall to the $5-6 range and give us a price of sales in the 20s, maybe low 30s, then at that point I would consider this a buy for sure. But until then, it's going to remain a neutral. So that's all I have for you guys today on IONQ stock. Please drop a like. Let me know what stocks you'd like me to cover next. And as always, I will see you next video.